In life insurance, there are two main types of coverage: term or temporary life insurance and permanent life insurance. Regardless of which policy you choose, they can both help transfer the risk of loss at the time of death in return for a fee. The challenge here is to stop asking which is the best life insurance policy. The question you should ask yourself and your agent is, which policy is the most appropriate to meet my short term and long term protection goals? People considering term insurance are typically younger adults in temporary situations, such as parents taking care of young kids or paying college tuition and homeowners with a mortgage. Hey, welcome to the Built Young, Grow Wealthy podcast. My name is retiree. In today's podcast episode, I'm going to discuss the 5 types of term life insurance policies, the pros and the cons, and who best fits each policy. At any point you hear value, don't forget to subscribe for more great content. Without further ado, let's get into this. Let's begin by discussing the pros and cons of term life insurance, as this is the most commonly bought life insurance policy. As far as the pros go, term insurance offers very affordable premiums the healthier and younger you are. It pays the death benefit to the beneficiaries when the insured dies. The cons: term life insurance only provides temporary coverage for the agreed upon years. If the insured dies after the policy has ended, the beneficiaries will not receive a death benefit. They do not carry a cash value, therefore, the owner cannot borrow money against the policy while alive. Term insurance offers death benefits only, no living benefits. So let's begin with number 1, level term. Level term is the most common life insurance term policy because it provides a fixed premium for a certain period of years. The pros: the premium is fixed, which means you can lock in the price for the policy's life. The coverage is usually between 5 to 30 years, and level term can be converted to a permanent life insurance policy at any time before the end of the term. But you must be aware that the premium will be higher than what you paid initially for your initial term. The cons: the policy will end at the end of the term. Again, there's no cash value that will be accumulated for you to be able to borrow from, and it is uncommon to have the death benefit increased. So, who should buy level term insurance? Anyone looking for temporary, inexpensive life insurance should consider level term. Number 2, increasing term. Increasing term is the least common term policy that will allow you to pay a level premium over time, allowing you to have an increased death benefit. The pros: it offers a fixed premium. You may add the return of premium rider, and this means that if you're alive after the policy, you may receive back the premiums you paid while you were paying for that particular policy. Also, the death benefit will increase every year to keep up with inflation. The cons: the premium will increase annually. So, who should buy increasing term insurance? Anyone who needs life insurance now but may need more coverage later to keep pace with inflation. This plan is also best suitable for anyone expecting more income later to support their lifestyle, such as getting married, having kids, etc. Number 3, decreasing term. Decreasing term insurance is a term policy where the death benefit will decrease over time to pay down high debts or a mortgage. The pros: the coverage is usually 15 to 30 years because that is the life cycle for most mortgage policies. It can be used to pay down a mortgage or other debts, and you can lock in a fixed premium for the term of the policy. The cons: the coverage reduces annually, and the policy cannot be renewed once it has ended because the balance will be zero. However, you may convert it to a permanent policy, but it usually never happens. Lastly, the family will receive no cash value, which means any final expenses the family may have to incur and any family lifestyle accommodations that needs to be taken care of will not be covered. So, who should buy decreasing term insurance? Anyone ineligible for other traditional life policies due to poor health, or who wants to ensure that their mortgage and debts are paid off if they die prematurely, should consider decreasing term. Number 4, annual renewable term. Annual renewable term, as the name suggests, is a term policy that offers guaranteed coverage every year. The pros: premiums are pay as you go. The policy can be renewed monthly or annually until ages 70 to 100, depending on the company. It can be converted to a permanent life insurance policy at any time during the policy. And also, there's no medical exam needed at renewal. The cons: premiums will increase according to your renewal age, therefore increasing the amount of your premium per term. This is best for short term coverage, so if you need long term coverage, then this is a con. Who should buy annual renewable term policies? Anyone who needs temporary coverage, such as between jobs, will benefit from annual renewable term life insurance. Number 5, convertible term insurance. Convertible term is a term insurance policy that can be converted or exchanged for a permanent policy. The pros: coverage is guaranteed no matter what age you die, as long as you pay your premiums. There is no medical exam to get approved, and there will be a cash value that you can borrow from in addition to the death benefit. The cons: premiums aren't guaranteed to stay the same when you convert from term. There is also a conversion deadline to convert the policy from term to permanent to qualify. Once a policy is converted from term to permanent life insurance, it cannot be reversed. So, who should buy convertible term insurance? Anyone who wants the same coverage without taking a medical exam and wants a cash value in addition to the death benefit will benefit from convertible term insurance. Your term life insurance policy is about to end and you still need more coverage. What should you do? Well, you have a few options. If you don't want to apply for a new policy or convert your existing policy to a permanent one, here are some options to consider. Traditionally renewable level term. Suppose you would like to requalify for the same level of term coverage that's about to expire without having to requalify by taking a medical exam. In that case, you should consider a traditionally renewable level term. This would allow you to maintain the same coverage and term length as your previous policy. However, your premium will increase according to your age if you can afford this option. Please note that this option is only available for a level term policy. The other option is re-entry renewable level term. If you are healthy towards the end of your term and want to save about 40% on your premiums, a re-entry renewable level term may be the better option. The biggest difference between traditional and re-entry level terms is that re-entry will be more expensive at renewal unless you are considered healthy and can qualify for the lowest preferred rates. If you are unhealthy, this plan will be very expensive, so you may consider traditional renewal as your more affordable option. Please note that this option is only available for a level term policy. Let's do a recap. Term life insurance is pure insurance protection with death-only benefits and no cash value. Level term allows you to pay fixed premiums with a fixed death benefit for a set amount of years. Increasing term is the least common type of term insurance that allows you to pay a level premium with an increased death benefit. Decreasing term is used to pay off a mortgage or high debt if you die before it's paid off. Annual renewable term is good for short-term coverage. And lastly, convertible term insurance allows a temporary policy to be converted into a permanent policy with a cash value and death benefit. Now that you know the different types of term life insurance policies, find a local agent to apply for a policy or use my link in the description box to compare companies and coverage terms to find the best policy for your needs. If you enjoyed this podcast episode, subscribe if you haven't already, share this episode on your social media platforms. That's all I have for now. Until next time, I will talk to you later.